Hi everyone, welcome back to Be Rich. I actually wanted to talk to this video yesterday itself. But Rupesh said no. Being the producer, he said, "Sir, this is important content. We can make it into 2 videos. Why make it 1 video?" So there you have the break. So you had to wait for 24 hours. I really don't know where Natco and Dr. Reddy prices ended. I'm sure Rupesh will put it here. It is corrected today, that is, as the recording on Friday at 11:45. The prices are where they are. I'm sure Rupesh by end of day would have gone somewhere else, and probably the price would have recovered too. It's quite possible because the market is Mr. Market after all. The morning when I saw it, it was so juicy. Low-hanging fruits, as they say, Dr. Reddy and Natco. And a lot of you are wondering, should you be nervous? Because the reason is you don't read about it, you don't know what Dr. Reddy and Natco is doing, and you feel rather worried looking at it. And rightly so, because if you just didn't know anything about Dr. Reddy and you saw the chart for Dr. Reddy since we started doing our Tiffin Coffee range, you will see Dr. Reddy from January 1st is down a whopping almost 10%. That means for every 100 rupees, you have lost 10 rupees. And if you look at Natco, that has a slight recovery, but at one point it was down 12%. That means we're losing 12 rupees for every 100. But it's slightly recovered now at 10% overall from 1st of Jan. So you'll be wondering, this kind of loss is kind of scary. Why is this happening? Is something wrong with the company? Well, nothing is wrong with the company. Pharmaceuticals is the kind of industry where one set of companies discover a drug by doing research and by doing lab studies, then creating groups of people, patients, testing it on them, seeing the validity of the drug, then go through the process of getting it verified and then getting it approved by the FDA, and then they're allowed to sell the drug and it's treated as a therapeutic by doctors, and doctors prescribe it and they build and nurture the market. Then you have companies like Dr. Reddy and Natco who take opportunity and they buy the license, or in case of Natco, sometimes contentiously they'll fight in court saying it is not under patent anymore. Whichever way, they will take that and they mass produce it, and a drug which has a existing market, they supply the drugs and they make a profit. So America is the largest market in this because, one, that's where most of these drugs go, and two, there's a price advantage there because you're making it cheaper here and you're getting more money there. So America is a big market for all these companies. So what happened with Dr. Reddy is their earnings were not to the expectations of the analysts. The analysts poured over the data of the drugs Dr. Reddy is making and Natco are making, and they said the cycles of these drugs, the way it is going right now, have so much of shelf life, and after this product which they're making so much money on, they will not be able to make money on this because other things coming to replace it, or there's a change in the way this disease is being treated, which these guys are not ready to make drugs for. They don't have the license for it, so their profitability is going to go down, so their earnings will go down. And like how in the case of Trent and other companies, you see the market pushing price to earnings somewhere to the sky above 100 because they see the future possibility of earnings going up. So they're factoring that in and they're biting into it right now. Same way, when they see earnings in the future may not be as high as they expect it to be, they immediately start selling it and it goes on a discount. That is an opportunity for value investors because fundamentally, nothing is wrong with Dr. Reddy or Natco. If you've been following them, they've got another slew of products, medicines, which they've been working on, which they've been getting the license for, which they are going to be launching, and they'll be producing that and they'll be supplying that to the market, as much famously, of course, the weight loss drug, which everyone's been talking about for the last 2 years or a year and more. They're getting into that. So there's a huge market and potential for that, and they will definitely get back into the green and earn a lot of money. And that is going for in the future, maybe 2 years, 3 years from now. The next 1 year, 2025, 2026, a few quarters might be a little dampening in terms of earnings, but those are great opportunities for us to sip in Tiffin Coffee range, as Anand says, into these companies, especially Dr. Reddy. A year ago, we couldn't have even imagined buying Dr. Reddy. Before the split happened, it was almost 6,000 rupees a share, and all of us used to think, oh my God, imagine you can buy Dr. Reddy. We were just sipping at Natco at that point of time, and Rupesh would say, sir, you can't imagine 6,000 rupees Dr. Reddy. How can I ever buy it? Then the split happened. So everyone imagined there's some arbitrage and all that. I said, forget the arbitrage. Split happened. Then now the correction has happened. Now Dr. Reddy, which is a much bigger company than Natco. I think it's 5 times the size of Natco. It's available at a price of Natco. So don't get scared. Yes, yesterday's video about Kalyan Jewellers, I laid it out and I said it's your choice. In the case of Natco and Dr. Reddy, it's still your choice. But I'd say be positive if you have the courage, if you're looking to invest and you're looking for opportunities to invest. And if you have not managed to invest and now only you saw our group, one of your friends introduced you and you've entered this Tiffin Coffee range challenge and you're only starting Tiffin Coffee today and Dr. Reddy and Natco are in your budget of Tiffin Coffee, I would definitely put that on your menu and consider it because we are doing this for the long term. We are not here, I'm the wrong channel for you and the wrong person for you if you're trying to flip this within a year to 2. Like I said in the previous videos, if you have a lump sum money which you want to flip for in a short span of time, less than 2 years, then buy gold. Gold is already up this year. From January when we started doing the Tiffin Coffee challenge to now, gold has significantly gone up. And it will probably continue going up. If we saw Bank of Japan, they're raising their interest rates. I don't think the Fed is going to go anywhere dropping rates, though Trump seems to be trumping away, standing on top of the virtual podium in Davos saying he's going to tell Fed, command them to drop interest rates. And he says, I command all of you to drop interest rates. But government doesn't work like that in the US. Already some of the things he signed as executive orders have been blocked by courts and judges saying you cannot do that, it's unconstitutional. So their system of governance is very rigorous. So don't worry. Things will not overnight change and be destroyed like some of you are worrying. Some of it is just bravado. So interest rates are going to go where they are because inflation is where it is. So gold prices will continue to go where it is. So gold is something that you should consider if you're looking at 2 years. If you have a lump sum which you can hold for 5 years and you don't need it for 5 years, then I suggest you buy some bond and you can look at some stocks. And again, don't ask me what bonds. I cannot tell bond names. Like I told you, there's a problem with bonds which is different from stocks. Bonds are not liquid as stocks. If you buy, some stock, you don't like it, like Kalyan Jewellers, you feel scared, you can sell it immediately, get rid of it, get out of it. But bonds are not like that. You buy a bond, you just cannot exit it as you wish. Though there will be people saying, yes, you can. Trust me, for new investors like you and me, it's a lot more harder to get out of a bond than getting out of a stock. But bond offers you monthly or quarterly or biannually, some form of return on your investment because you're lending the money to them, like an FD. So you get that money and you can invest it in stocks. So your capital is preserved, plus you get the interest which you can invest in stocks. So that is for 5 years. If you are more than 5 years, you can wait for 10 years for this lump sum money you don't need for next 10 years. Then I'll say put it in bonds and the interest that comes, either you can do stocks or you can just put it passively in the Nifty, put it on autopilot and that will be a separate thing which is building on its own. It's like you put a tree in your backyard, coconut tree, and in 10 years time it's going to bear fruit. You don't have to worry about that tree. There's water plenty there. It's next to a well and it grows by itself. 10 years from now, your kids will be happy because coconuts will be there at home for free. It's like that. You put the bonds, the interest goes into autopilot, into Nifty 50 passive funds, and you forget about it. And whatever, you continue doing Tiffin Coffee today. So that way, you have 2 sources of wealth building happening. One running an autopilot, which you put and you forgot, which is accumulating and growing. And you're continuing doing your Tiffin Coffee now. So that way it builds in multiple levels, in multiple ways. So wealth starts creating for you. And like I said in the previous video, it lowers your anxiety today because if you lose your job, don't have to worry. If something happens, you have money. You have a place to stay, you have money, most anxieties go away. So that is the approach which you should have. So Natco, Dr. Reddy, nothing is wrong with the company. As of now, things are good. Price correction is because the FIIs feel they should get more value for it. And some of it is just pure profit booking going on because the way the Indian rupee is depreciating, these companies, for them, their earnings is evaporating. Every day they see the rupee sliding. For FIIs, more and more money is leaving the table. So they don't have any other choice but to exit and re-enter it, especially if they've entered some of these stocks a year or 2 ago. They're up 30%, 40% from where they entered. So of course, they'll want to book some profit and exit. So keep all that in mind. If it does change, in the case of like Kalyan Jewellers, there is something I feel nervous about and I'm getting worried, I'll definitely come back with another video or on the Instagram, I'll tell you if there's a change of heart or change of opinion, especially if my brother's sharing something, I'll definitely bring it to you and bring it to your notice. and you can do what you wish with it at that point in time. As of now, continue investing. Monday will be another great day to start investing again. For those of you who missed out so far, 18 days is all that you've missed out. There's more than 200 plus days. There's 220 plus days for you to still continue doing Tiffin Coffee with us. So you haven't missed out. You just may be a little few minutes late to the party. That's all it is. Day 19 starts on Monday, and look at different coffee ranges all over again and invest. Because it's a wonderful thing. Once you start investing and it becomes a habit, you'll really start seeing the benefits of it. Just like exercise, diet, everything else, even this habit, you'll start seeing benefits. Within a few weeks, you'll really start seeing why I've been harping so much about investing in Tiffin Coffee range. Like a lot of you have realized in the group. Thanks for watching the video. I hope you have a wonderful Saturday and your weekend is wonderful. It is Saturday evening. Tomorrow is Republic Day. So do celebrate our Republic. In this current world, the way the climate is, you should be proud to be in a country like ours, to have democracy the way we do have. Yes, we may have differences of opinion in our country, but we still manage to get along and move along, which makes me very proud to be an Indian. I hope you're also feeling proud to be an Indian. Thanks for watching Be Rich. See you tomorrow on Republic Day evening with another video. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.